Okay. So hello everyone, good afternoon. So how are you guys? Please confirm. Okay, good afternoon everyone. So my dear friends, today we are starting chapter number 2, unit 1, demand and elasticity. So as you can see, chapter 2, unit 1 has two parts. Number 1, demand. Number 2, elasticity. Number 1, demand. Number 2, elasticity. Okay. So let's start guys. अच्छा एक बार also please kindly check. Yes, हाँ बोलिए. Kindly mute कर लीजिए ना. Okay. So guys, let's start our discussion for the day then. Demand. When we study this chapter, my dear friends, I'll want you to remember one thing. Always think from consumer's viewpoint. Whose viewpoint do we need to think from? The answer is consumer. We will always need to think from consumer's viewpoint, guys. All right. So, okay. So, as I told guys, that we need to remember that when we study this chapter, which is demand, we always need to study from consumer's viewpoint. Okay. So, what are we studying? Number one, we are expected to know. Number one, we are expected to understand the concept of demand first of all. We are expected to understand the concept of demand first of all, right? So what exactly does the term demand mean? What exactly does the term demand mean? We are going to understand that. So pay attention friends, right? So my dear friends, basically indicates demand basically indicates quantity of a commodity. Please remember everyone, demand basically indicates quantity of a commodity, quantity of a commodity, quantity of a commodity. Please remember, I'll write down the key points, sir. Okay, quantity of a commodity which the consumers are willing to buy. Who is willing to buy? Consumers. I'll request you all to please remember that here in this entire chapter we are only focused upon the consumer. We are only focused upon the consumer. We are not thinking from producer's viewpoint. We are thinking from consumer's viewpoint. Okay, so yes, and yes, my dear friends, those who have a doubt like regarding opening of last session's PDF, I'll get it checked and I'll also ask our technical team to check, and I'll also make sure I check whether it's opening or not. Okay, so don't worry about the same. Let's focus on today's session with a lot of energy, right? So we are focusing on the word demand. Demand, my dear friends, indicates the quantity of a commodity which consumers are willing to buy, which consumers are willing to buy. And now remember 2 points. There are 2 points guys that we need to remember while we talk about the term demand. What are the 2 points? And I'll ask each one of you to write down those points. The 2 points are at a particular price at a particular point of time, at a particular price at a particular point of time, at a particular price at a particular point of time, at a particular price at a particular point of time. Always remember this. Okay, so remember when we talk about demand in basic English, if you ask your English teacher basically, so they will tell you that demand basically means what you want, right? But economics is slightly different. When in economics you're talking about the term demand, when in economics you're talking about the term demand, then please remember my dear friends, when you are talking about the term demand, it is basically referring to the quantity of the commodity which the consumers are willing to buy. That is all right. You all know this, that the quantity which the consumers are ready to buy or able to buy. Okay, that's good. Which the consumers are ready to buy and willing to buy, but always we will define at a particular price at a particular point of time. So basically when you are defining the term demand, it always has to be with respect to two key things. One is the particular price and one is the particular point of time. Whenever we define the term demand, it always will have to be with respect to two particular things. particular price and particular point of time. Particular price and particular point of time. It's a very important MCQ question, by the way. The demand is always defined with respect to, so two things we will remember: price, point of time. Price, point of time. Come on everyone, price and point of time. Now sir, how come? I'll tell you what. Let's say guys, we are talking about a bottle of a perfume. Okay, now let's say if this bottle of perfume is sold for 5,000 rupees, let's say the demand is 200 units, just for example's sake. Okay, but my dear friends, you all tell me, if the price is 1,000 rupees, what will happen to the demand? We don't know the exact number, but most of us will generally agree that the demand for this 200 units will increase to somewhere around 600 or 800 units. This is just an example, I know, but what I'm trying to say is that you see, when price was at 5,000, then demand was 200. When price is 1,000 rupees, then the demand is 600 units. So basically what I'm trying to tell you is that at each price there is a particular demand. So demand is always defined with respect to a particular price. Demand is always defined with respect to a particular price. Correct, number one. And number two, sir, what about point of time? Now guys, let's think of mobile phones. You see, mobile phones that we have today, let's go to our grandparents' generation. You will not find out that many mobile phones in the hands of people. Then you come to in your parents' generation. The mobile phones demanded by our parent generation changed compared to grandparents' generation. And now look at our generation. The demand for mobile phones has yet changed. So it is also dependent on time factor, and that is why in general terms, when we define demand, we define it in terms of time as well. Not only in terms of price, but we define it in terms of time as well. Okay, correct. Sir, correct. Sir, can you please summarize this thing in Hindi? Yes, I'll summarize it in Hindi before I start to the next topic. Okay? डिमांड का मतलब होता है कि एक पर्टिकुलर प्राइस और एक पर्टिकुलर टाइम पर एक कंज्यूमर या बहुत सारे कंज्यूमर्स कितना प्रोडक्ट कंज्यूम करने को रेडी हैं एक पर्टिकुलर प्राइस पर और एक पर्टिकुलर पॉइंट ऑफ टाइम पर. हमें यह नहीं भूलना कि इस चैप्टर में हमें हमेशा किसके पॉइंट ऑफ व्यू से सोचना है, हमें हमेशा कंज्यूमर के व्यू पॉइंट से सोचना है. केवल अपने इतना ध्यान रखेंगे तो बात सही बनेगा, है ना? ओके, फैंटास्टिक सर. मूविंग ऑन. नेक्स्ट आप लोग अब समझिएगा बात को, कॉन्सेप्ट ऑफ डिमांड. कॉन्सेप्ट ऑफ डिमांड में नेक्स्ट टॉपिक है दो तरीके की डिमांड. आई विल वांट यू फ्रेंड्स टू नो. एक, ऐसे तो देयर आर डिफरेंट टाइप्स ऑफ डिमांड, इन रियलिटी देयर आर डिफरेंट टाइप्स ऑफ डिमांड, but two particular types of demand I'll want you to know. So pay attention friends. One is called individual demand, and it is very important. I'll tell you why. Okay, but first understand the concept. Individual demand, and then there is this thing called market demand. Okay, what is individual demand basically? Individual demand, my dear friends, is when you are talking about a single consumer. Let's say the price of a product, let's say the price of the products are 10 rupees, 15 rupees and 20 rupees. Now quantity demanded by consumer, let's say the name of the consumer is Mr. A. Mr. A, for example, if it is 10 rupees, let's say Mr. A will consume 100 units. If the price is 15 rupees, let's say Mr. A will consume 200 units. If the price rises to 20 rupees, let's say he will consume 220 units. What are we discussing here? Here, at different price levels, or you could say something like this, that it will be 80 or it will be 40, whatever it is. What I'm trying to show you is that here when we are talking about individual demand, we are talking at a respective price. We are talking at a respective price point. Right? That is what I'm talking to you about. Demand is always defined with respect to a particular price, and when we are talking about quantity demanded by an individual consumer, जब अपने एक कंज्यूमर का बात कर रहे होते हैं कि एक कंज्यूमर का अलग अलग प्राइस लेवल्स पर डिमांड क्या होने वाला है, तब अपने उसको बोलते हैं इंडिविजुअल डिमांड. राइट? तब उसको बोलते हैं इंडिविजुअल डिमांड. करेक्ट? ओके सर. नाउ मूविंग ऑन. सर, व्हाट इज मार्केट डिमांड? My dear friends, in reality, market is composed of infinite consumers, if not infinite, lakhs and crores of consumers. So what I'm trying to say is, let's say I take two consumers. For example, I'm taking two consumers, okay? Don't worry. In reality, there are millions and billions. I know that. You see, if price changes from 10 to 15 to 20, let's say the quantity demanded at different levels are 100 units, 80 units and 40 units here, and quantity demanded by B are 60 units, 50 units and 30 units. So what I'm trying to say is, this is the demand for by an individual consumer, and when you add the individual demands, you get the market demand. QM is basically QA plus QB. Oh, so sir, simply speaking, when we add the demands of individual consumers, we get the market demand. Absolutely correct. So yeah, let's say it's 160, it's 130 and it's 70. So my dear friends, these are the concepts of individual and market demand. These are the concepts of individual and market demand. Guys, are we crystal clear till here? Come on everyone. Till now, we have understood two things. We have understood two things. Thing number one that we understood is, what is demand? Quantity which the consumers are willing to buy at a particular price at a particular point of time. Number one. Number two, we understood individual and market demand. When we talk about demand for a product by an individual consumer, it is individual demand, and when we add the demand of various individuals, we get market demand. Is it all right, guys? Okay. One interesting question one friend has asked me, that sir, that since you are adding the demand of individual consumers, is it called a market demand? And is market demand a macro concept or a microeconomics concept? A very important and good question asked by one of our friends. The question is asked by Muhammad Shadan. Very good question, friend. So I'll tell you what. In market demand, what do we do? In market demand, for a single commodity, demand at different prices by different consumers, we add. So it is a micro concept. Market demand is a micro concept. Why? Because though there are many consumers, you are correct. We are adding the demand of many consumers to arrive at the market demand. To arrive at the market demand, you are correct. But in reality, the commodity is one. Na? Had we taken demand for all the commodities by all the consumers, it would have become aggregate demand. And yes, my dear friend, aggregate demand is a macro concept, which we are not bothered about here. Here we are bothered about market demand. Yes, market demand is a micro concept. It's not a macro concept. Okay? Yes, sir. Yes, sir. Fantastic. Yes, Sakshi, yes. Moving on. Now, have a look, guys. Come on, everyone. If you guys pay attention, here I have drawn for you a graph of demand curve. Sir, but you have drawn three graphs. What do they indicate? I'll tell you that. But first of all, you try and understand something. What is it, sir? That demand curve, be it individual demand curve or market demand curve, one important MCQ question about demand curve, very important. That demand curve in general, yes, there are exceptions which we are going to talk about. There is no doubt about the same. Yes, there are exceptions that we are going to talk about. There is no doubt about the same. But right now, we are understanding demand curve. Demand curve means graph of the demand. And please remember that the demand curve is downward sloping. Remember this, demand curve is downward sloping. There is another word for this downward sloping curve. It is also called demand curve is an inverse curve. You can also say demand curve is an inverse curve. Sir, why are you saying like this? Demand curve is downward sloping or inverse curve? I'll tell you why, guys. Because as you see, when the price increases for commodities, we are talking about normal commodities, okay? Like, you know, clothes that we wear, the food we eat, you know, I'm talking about general commodities, okay? In general, what happens is, when their price rises, their quantity demanded falls. Yes, there is exceptions. We are going to study exceptions in our curriculum. Don't panic about the same. What I'm telling is, as a general rule, when price rises, quantity demanded falls, and when price falls, quantity demanded rises. So my dear friends, what kind of relationship are we seeing? It is an inverse relationship. They are traveling in opposite direction. दोनों उल्टा भाग रहे हैं. प्राइस कम हो रही है तो क्वांटिटी बढ़ रही है, प्राइस बढ़ रही है तो क्वांटिटी कम हो रही है, क्योंकि दोनों उल्टा भाग रहे हैं. So my dear friends, we call it to be an inverse relationship. 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 Please remember everyone. Okay, sir. Got it, sir. Got it, sir. So now we have understood that demand curve is having inverse relation. Now, so what happens is I'll show you, I'll draw a demand curve for you all and you will find out what I'm talking about. See, this is called price axis. This is the y axis, but it is called the price axis, and this is the x axis, but here we plot quantity. Okay. So friends, have a look here. Here it is price, here it is quantity. Okay. Now, if let's say the price is P1, that is a very little amount. So quantity will be very high amount. But let's say the price has increased. So yes, you are correct. The quantity will reduce. Now see, initially P1 and Q1 were meeting where? They were meeting here. But now where they are meeting? They are meeting here. And yes, my dear friends, when you join the two, you are getting the curve which we were discussing about. A downward sloping curve. A downward sloping curve or an inverse curve as you call it. Downward sloping curve or an inverse curve as you call it. Okay, okay. So basically, I'll repeat for you. Demand curve कैसा स्लोप होता है? डाउनवर्ड स्लोप होता है. इनवर्स रिलेशन की वजह से. किसके बीच में इनवर्स रिलेशनशिप? प्राइस और क्वांटिटी के बीच में. जब प्राइस बढ़ता है, when price rises, quantity demanded falls, and when price falls, quantity demanded rises. That is it. That is it. Okay. So now moving on. I'll explain again. For those who are having difficulty, I'll explain again. What happens is when price is low, when price of a commodity is low, quantity demanded for the commodity is high. In general, you see, if you go to, let's say we are talking about a mall which has a store, shopping store basically, wherein we are going to buy clothes. Okay. So let's say if you get to find out that the clothes, that the shirt that was selling for 2000 is now selling for 60% off. Now guys, what will happen? Yes, at 2000 also there were buyers of the product. I don't doubt that. Let's say 100 people were buying or 100 shirts were being sold. But guess what? If there is 60% off, you all tell me what will happen. Number of shirts sold will rise or number of shirts sold will fall. What say guys? What do you think? What do you think? Come on friends. Yes, you are absolutely correct, my dear friends, that when we get a discount on t-shirts, more of the consumers will come. Absolutely correct. So now the t-shirt price is 800 rupees, right? And yes, this is exactly what we are talking about. Okay. Yes sir, there is an inverse relationship here. And sir, why there are 3 graphs here? Can you please tell us? Yes, because guys, here I have drawn the first graph to show you individual demand of consumer A, individual demand of consumer B, and market demand of consumer B. Not consumer B, actually market demand is not of an individual consumer but of all. So in general market demand. What I am trying to tell you is, be it individual demand, be it market demand, एक चीज we will not forget. One thing we will not forget. What we will not forget? That the demand curve is downward sloping because of inverse relationship between price and quantity demanded. Correct? Okay sir. So guys, most of you have given the correct answer, which is very good. So guys, pay attention everyone. Pay attention. Sir, we are doing it everything from the institute material na? Absolutely yes. Just focus on what we are studying. It will be prepared by the end of today's session. Demand will be prepared by the end of today's session. So just focus on what we are discussing. Okay. Discussion पर focus करिए, है ना? Okay. Now guys, there is something called types of demand. Before we understand factors affecting demand, let's try to understand what are the types of demand. Okay. Let's try to understand what are the types of demand. In reality, types of demand I could explain with factors of demand only, because factors affecting demand is the one which is more important, but I am intentionally trying to convey this so that it becomes even easier to teach further. Okay guys, there are 2 commodities being shown here. You all tell me what it is. Absolutely correct. Sir, one is petrol and the other one is car. My dear friends, absolutely correct. Such goods which are demanded jointly, such goods which are demanded jointly are called, remember, complementary goods, because now we will be using it. Okay, these are called complementary goods because they complement one another. If you need one, you will have to buy the other, like pen and refill. Okay, then there is this car and petrol. So if you buy one, you will have to purchase the other. Like if you bring a printer home, then there is some cartridge refilling that you will have to do again and again. So cartridge and printer are again joint demand. So my dear friends, this demand for complementary goods is called joint demand. Very easy. जब अपने को कोई दो गुड्स एक साथ चाहिए होता है, मतलब जब एक गुड्स का डिमांड बढ़ेगा तो दूसरे गुड्स का जरूरत भी बढ़ेगा. जब भी ऐसा होता है, अपने ऐसे डिमांड को ज्वाइंट डिमांड बोलते हैं. अपने ऐसे डिमांड को क्या बोलते हैं? ज्वाइंट डिमांड बोलते हैं. ज्वाइंट डिमांड बोलते हैं. यहां पर दो चीजें दिख रही थी आपको, एक कार थी और पेट्रोल. क्योंकि कार और पेट्रोल, ऐसा नहीं होगा कभी भी कि अपने कार परचेज कर लिए बट अपने को पेट्रोल का दरकार नहीं पड़ा. Sir, it is possible in case of electronic vehicle, EVs. But my dear friends, in electric vehicles also, we will need a charging point. So in that case, the charging point and the car will become joint demand. What I am trying to convey in simple words is that when two goods are required together, the demand for them is called joint demand and the goods are called complementary goods. So my dear friends, an MCQ question, a very important MCQ question. Now I am going to ask you, you will have to answer. You will have to answer. Okay, so let's see who is able to answer the question correctly. Let's see. My MCQ question number 1 for today is, MCQ question number 1 for today is, demand curve has what kind of slope? Demand curve has dash slope. Demand curve has dash slope. Now here are your options. Number 1, positive slope. Number 2, negative slope. Number 3, mixed slope. Number 4, none of the above. What say guys? What do you think is the correct answer? What do you think is the correct answer? Which kind of slope does demand curve have? Come on friends, tell me everybody. Most of my friends have written downward slope. Very good, but here I did not give you that option. It's good that you have written downward slope, but it is not the option. You have 4 options in this MCQ question. Come on everyone, I'll need your answer before we proceed. Very good. Okay, very good. Arshdeep, good answer. Vivek, good answer. Rahul, good answer, my dear friend. Suhani, correct answer. Very, very good. So almost all our friends have given correct answer. Yes, it is correct. The correct answer is negative slope. Normally speaking, my dear friends, demand curve has a negative slope. You all are absolutely correct. It will not be positive slope. Why? Sir, because anything has a negative slope when there is an inverse relationship. Like I said in case of demand, when price of the commodity rises, quantity demanded will fall. जब प्राइस बढ़ता है तब क्वांटिटी डिमांडेड कम होता है, एंड जब प्राइस कम होता है तो क्वांटिटी डिमांडेड बढ़ता है. इस अपोजिट रिलेशनशिप को हम लोग नेगेटिव रिलेशन या इनवर्स रिलेशन बोलते हैं. इसीलिए नेगेटिव कर्व है ना. नेगेटिव इनवर्स वर्ड अपने साथ साथ यूज यहां पर कर सकते हैं. ओके, करेक्ट. सो फ्रेंड्स, मूविंग ऑन. ये था ज्वाइंट डिमांड. डिमांड फॉर दोज गुड्स विच आर रिक्वायर्ड टुगेदर. मोबाइल फोन एंड चार्जर, car and petrol. Very good, very good. Now guys, have a look here. Have a look here. I am explaining one more simple concept before we start factors affecting demand. It is very important for overall understanding, right? My dear friends, here I am trying to explain you the concept of derived demand. You see, very soon we will be discussing utility, law of diminishing marginal utility. So there also I will be using these words. So please pay attention, okay? There is something called derived demand. Sir, what is derived demand? My dear friends, I'll give you an example. Derived demand समझना very easy. Let's say, my dear friends, you people are studying here economics right now. Okay? What demand did you have directly? You didn't have the demand to watch me. Your demand was to understand economics better, to prepare economics better. आपका डिमांड ये था कि आपका इकोनॉमिक्स की तैयारी और बेहतर हो जाए, आप इकोनॉमिक्स में और बेहतर हो जाए। तो आपका डायरेक्ट डिमांड किसके लिए था? इकोनॉमिक्स के नॉलेज के लिए। योर डायरेक्ट डिमांड वाज फॉर द नॉलेज ऑफ इकोनॉमिक्स, बट बिकॉज द डिमांड फॉर नॉलेज ऑफ इकोनॉमिक्स अरोज, डिमांड फॉर मी अरोज. So basically my demand is derived demand. Similarly, in our dreams or when we become successful, we think of a house. But when we purchase a house, जब हमें घर खरीदना है, when we want to purchase a house, obviously to build the house, lot of sand, cement, stones, gravel and everything will be required. So the demand for all these things is derived demand. This is basically derived demand. This is basically derived demand. Demand for those commodities which are not wanted directly, but demand for those arise indirectly. So the demand for sand and everything has not arose directly. None of us are dreaming of sand and cement. We are dreaming of a good house, but to build that house we will need sand, cement and everything this. Understood? So the demand, to fulfill the direct demand, the commodities that we desire is called derived demand. The demand for such commodities which help us in fulfilling our direct demand for some other commodities. I am a derived demand because I am, helping you to achieve. I and Institute of Chartered Accountants are basically helping you achieve your direct demand for knowledge in economics. Understood? I hope guys it's crystal clear. Demand, derived demand. Okay, very good, sir. Correct. Types of demand. Two types of demand we have understood. I'll explain both in English and Hindi. First in English, okay? So the first type was joint demand. It was demand for those commodities which are required together, like car and petrol. And then I explained derived demand. Derived demand is basically an indirect demand which arises to fulfill direct demand. To build a house, we will need cement, stones, iron rods and everything. So the demand for this cement, stones and iron rods is derived demand. Okay. Now I'll explain it in Hindi once again. दो तरीके का डिमांड अपने अभी तक पढ़े हैं. पहला जॉइंट डिमांड. ये वो चीजों के लिए डिमांड होता है जो अपने को एक साथ यूज करने होते हैं, जैसे कार एंड पेट्रोल, मोबाइल फोन एंड उसका चार्जर, जिनके लिए डिमांड एक साथ अराइज होता है. करेक्ट. सिमिलरली हम लोग नेक्स्ट पॉइंट पढ़े डिराइव्ड डिमांड. डिराइव्ड डिमांड वो कॉन्सेप्ट है जहां पर हम लोग ये स्टडी करते हैं कि डिमांड उन चीजों का अराइज हो रहा है जिनका जरूरत है डायरेक्ट डिमांड को पूरा करने के लिए. जैसे अपने को घर बनाना है तो डायरेक्ट डिमांड तो घर के लिए है, पर घर बनाने के लिए हमें लेबरर्स की जरूरत होगी, हमें जरूरत होगी सैंड की, सीमेंट की, बालू के, पत्थर की, सीमेंट की. तो दोस्तों इन सब का डिमांड को अपने डिराइव्ड डिमांड बोलते हैं. क्लियर है? अभी तक अपने दो टाइप्स ऑफ डिमांड पढ़े हैं. नाउ गाइज वी आर अंडरस्टैंडिंग द थर्ड टाइप. ओके. Moving on to the third point. What are the types of demand? Okay. In the third type of types of demand, we are studying, and this is the last type as well. इसके बाद we will discuss something else. Okay. इसके बाद we will discuss something else. So please pay attention, everyone. Okay. So please pay attention, everyone. Okay. The third type of demand that we are discussing here is, please pay attention, everyone. It is called composite demand. It is called composite demand. Sir, what is composite demand? My dear friends, composite demand is basically the demand for things. Composite demand is basically demand for commodities which have multiple uses. I will give you an example, friends. Let's say milk. Milk is used to extract butter. Milk is used to extract cheese. Milk is used to extract cream, and there are so many other uses, my dear friends, that milk has. Isn't it? Yes sir, it does. Exactly my point. So the demand for such commodities which have multiple uses is called composite demand. Composite demand. Sir, can electricity be called composite demand? Yes, because electricity can be used to charge our mobile phones, to run our air conditioner, to switch on the lights, to switch on the fans, and for so many other reasons, right? And therefore, yes, demand for electricity is a composite demand. You are absolutely correct. Demand for electricity is a composite demand. You friends are absolutely correct in saying so. Okay? Yes, sir. So my dear friends, is it absolutely clear till here? Come on everybody, please confirm. Okay. Yes, sir, it's absolutely clear. Very good, friends. You all are absolutely clear. Very good. Very good. So now let me explain you some other point. Let me explain you some other points. Now, friends, we are going to indeed a very important topic, which is what? Sir, it is factors affecting demand. Very important, and we will practice some MCQs after this. Okay, factors affecting demand. Okay, let's go. Factors affecting demand. Pay attention friends, I'll explain each and every point. I'll also draw the graph. मैं आपके लिए ग्राफ भी बना दूंगा. Pay attention, है ना? Okay. What does factors affecting demand means? Means on what does demand depend? On what does demand depends? Demand for a commodity must depend on a lot of things, right? So on what are the things that demand depends, we are studying here. Okay, let me explain it to you one by one. The first and the very important thing is own price of a commodity. The first and the very important point is own price of a commodity. The first factor which can cause a fluctuation in demand is its own price. And generally speaking, my dear friends, we are not talking about exceptions here, but generally speaking, when the price of a commodity falls, the quantity demanded rises, and when price rises, quantity demanded falls, other factors remaining constant. You know, whenever we are studying, please remember, whenever we are studying one factor affecting demand, my dear friends, please remember that other factors we will assume to be constant, that is they are not changing, otherwise it will be very difficult to predict what is happening to demand. Okay, so please remember that when we are studying own price of the commodity, we are not considered with other factors that might be able to affect demand. Own price of the commodity is the number one point. Own price is the number one point. Okay, yes, yes sir. Own price of a commodity. Moving on, please pay attention friends. Moving on to number two, own price of a commodity. After that, point number two is income of the consumer. Point number two is income of the consumer. Now my dear friends, here you will have an observation, and a very interesting observation. A very interesting observation. I'll tell you what. Please pay attention. Okay. Income of the consumer. So friends, there can be mainly three types of commodities that I need to explain to you. Number one, as I already know, and as you already know, it is the normal goods like clothes, the clothes that we wear, tourism, the amount, the quantity of traveling that we do. So see, for normal commodities, what happens is, if your income rises, quantity demanded for the commodities will rise. It is obvious na, that because your income has risen, you have become a better off. You have come to a better off position basically. Since you are in a better off position right away, you will naturally demand more since you are able to afford more. Okay, so there it is. So here there is a direct relationship. Here there is a direct relationship. Sir, what do you mean by a direct relationship? Sir, what do you mean by a direct relationship? My dear friends, direct relationship is the one. Direct relationship is the one where there is one-to-one relation. That is, one is rising, so other is also rising. Like in price and quantity, there was inverse relationship. Here there is direct relationship. That is, if one rises, the other one will also rise. If one is rising, the other one will also rise. Okay, number one. Number two, after income of the consumer, normal goods, then we are talking about point number two. Please pay attention. After normal goods, we are, and yes, we will talk about price of related commodities, don't worry, that will be point number 3. Okay, we'll discuss all of them, please pay attention. Point number 1 was own price of the commodity. Point 2 I explain is income of the consumer. So if it is a normal good, then as income rises, quantity demanded will rise. Okay, but let's say the commodity is a one which is of inferior nature, So what do you mean by inferior commodity? It means basically, let's say for example, rice comes in two grades. Just for example, rice has two grades. Let's say rice grade A, grade B rice. Now my dear friends, initially you had lower income levels. शुरुआत में आपका इनकम कम था, because of which you used to purchase low quality grade rice. But my dear friends, let's say your income rises, what will happen? You are absolutely correct, sir, we will now buy quality A rice, that is grade A rice. So guys, tell me what happens with grade B rice, that is the rice which was of inferior quality. उसके demand का क्या होगा? What will happen to the demand of for inferior quality rice? Absolutely correct. When income rises, the demand for inferior commodity products tend to fall. Why? Because consumers shift to better commodities, better options. So whatever we have studied till now, I'll summarize it in Hindi once again. पहला पॉइंट अपने पढ़े ओन प्राइस ऑफ द कमोडिटी. अगर कमोडिटी के खुद का प्राइस बढ़ेगा तो क्वांटिटी डिमांडेड घटेगा, एंड वाइसी वर्सा मतलब उल्टा भी सही है कि जब प्राइस कम होगा तो क्वांटिटी बढ़ेगा, प्राइस बढ़ेगा तब क्वांटिटी कम होगा. ये तो था केवल पहला पॉइंट. दूसरा पॉइंट है इनकम ऑफ द कंज्यूमर. इनकम ऑफ द कंज्यूमर में हम लोग तीन तरीके की गुड्स की बात करते हैं. पहला नॉर्मल गुड्स. नॉर्मल गुड्स में ऐसा होता है कि जब आपका इनकम बढ़ेगा, आपका सोसाइटी में स्टैंडर्ड बढ़ेगा, आप क्वांटिटी कंजम्पशन बढ़ा सकोगे, आप और बाहर घूमने जाओगे, या जिस तरीके के आप कपड़े पहन रहे हो आप और तरीके के कपड़े खरीदोगे, राइट. नंबर 2, इंफीरियर कमोडिटीज. अगर अभी तक जब आपका इनकम लो था तब आप कोई इंफीरियर कमोडिटी कंज्यूम कर रहे थे, तो जब आपका इनकम बढ़ जाएगा आप बेटर क्वालिटी पे शिफ्ट हो जाओगे इनकम बढ़ने से. इसका मतलब कि इंफीरियर क्वालिटी कमोडिटी का डिमांड क्या होगा? कम हो जाएगा. यही मैं समझाने की कोशिश कर रहा हूं. Okay, yes sir, yes, correct. Is income of the consumer. Sir, if you all look carefully, हमारे इंस्टीट्यूट के मटेरियल में वर्ड लिखा हुआ डिस्पोजेबल इनकम. अब मैं आपको एक्सप्लेन करूंगा मीनिंग ऑफ डिस्पोजेबल इनकम. प्लीज पे अटेंशन एवरीवन. ओके, प्लीज पे अटेंशन एवरीवन. ओके, डिस्पोजेबल इनकम ऑफ द कंज्यूमर. Sir, what does disposable income mean? Because you have written only income, you have not written disposable. My dear friends, इनकम में से आप टैक्सेस को हटा दो, उसको डिस्पोजेबल इनकम बोलते हैं. आप समझो, लेट्स से हियर इट इज मिस्टर बी. ओके, मिस्टर बी, दिस इज मिस्टर बी. आप लोग एक बार के लिए मान लीजिए, लेट अस अज्यूम मिस्टर बी टोटल इनकम इज 10 लाख रुपीज. ओके, नाउ 30% टैक्सेस आर पेबल बाय मिस्टर बी. Let's say for example, just an example. So 3 lakh we deduct. So Mr. B has how much left? 7 lakh. Bus, this is called the disposable income. Income that is available to you to do your expenditure, to meet your expenditure. जो इनकम आपके पास गवर्नमेंट को टैक्सेस देने के बाद बच जाए, जिसको आप यूज कर सको अपनी जरूरतों को पूरा करने के लिए, उसे आप डिस्पोजेबल इनकम कहते हो. क्लियर है? सो बात एक ही है, डजंट मैटर. थर्ड पॉइंट इज इनएक्सपेंसिव नेसेसिटीज. सर, इनएक्सपेंसिव नेसेसिटीज का कैन यू गिव अस एन एग्जांपल? एग्जांपल, सॉल्ट, नमक, salt that we add to food. Guys, you tell me, if your income rises, will you start purchasing more of salt? You will not start adding more of salt to your food. Whatever salt you were initially eating, you will continue to eat that. Maybe if you were so poor back in the olden times that your salt consumption was less, then maybe to a certain extent you will increase the quantity consumption of salt. But beyond that, quantity consumption of salt will stop, will halt. So yes, so there are three things here. Point number 1, if it is a normal commodity, as income rises, quantity demanded rises. If it is an inferior commodity, as income rises, quantity demanded will fall. And inexpensive necessities, quantity demanded may rise with the rise in income for a certain level, but beyond that there will be no change. The answer is there will be no change. There will be no change because of income to the level of quantity demanded. And now moving on to the third point, which in institute's material is point number 2. Okay, so guys, what has happened, I'll tell you so that you are not confused. Institute's book point 1 is this, I have explained this. This point 2 that I have explained is point number 3 in institute's book. That's it. And now whatever is there in point 2, I'll explain it as my point 3. Okay, which is price of related commodities. Before I start price of related commodities, I will want you all friends to confirm that you have understood everything till now. Yes or no, everybody in the chat? Come on, everyone. Kodli is asking, sir, why our income will always rise? No, Kodli, what I am trying to say is income may rise or fall. I am just trying to explain the relationship that, like here I told, if income rises, quantity rises. Na? Similarly, it can happen that if income falls, quantity will fall. Understood, Kodli? I was just trying to explain one side of the thing. Okay. So yes, price of related commodities. Price of related commodities. And guys, you remember I taught you one thing called joint demand, right? This will be used here. So let's pay attention. What are these related commodities? My dear friends, related commodities discussion is divided into 2 parts. How many parts, friends? 2 parts we are discussing it. 2 parts so we are discussing it. Okay. Yes. Yes, sir. Okay. So let's pay attention. And if you all are wanting to know, sir, which part of material we are in, we are currently doing the second and the third page of Institute's book. Okay. First page is the chart where Institute tells us what all is covered in demand. That is the topics to be covered. And in second and third, we are studying. Okay. Heading is what determines demand or factors affecting demand. Okay. So let's pay attention, everyone. Price of related commodities. Guys, there are 2 types of commodities we are talking about here. Number 1 is the complementary goods. Number 1 is the complementary goods. And number 2 is the substitute goods. Number 2 is the substitute goods. Number 1 is the complementary goods. Number 2 is the substitute goods. Sir, what are complementary goods? I explained you today in the types of demand, the goods that are used jointly or that are purchased jointly. My dear friends, those goods are called complementary goods. Okay, those goods are called complementary goods. The goods that are used jointly, that are purchased jointly, that are consumed jointly are called complementary goods. Okay. And sir, what are substitute goods? So what are substitute goods? Goods that are competition of one another. Sir, please give us an example. Okay, I'll give you example. Complementary goods used jointly. Example, I have been telling car and petrol. Okay, car and petrol. It can be mobile phone and charger. All those things, my dear friends, are basically complementary goods. So how are they affected by price? I will tell you. But understand the concept. Okay, sir, what are substitute goods and what is substitute demand? I'll tell you. Guys, like tea and coffee compete with one another. Okay, these are substitute goods. That is, you can use one or you can use the other. Okay, these are substitute goods where there is competition. Okay, you can use a product of Pepsi or you can use a product of Coca-Cola. So basically, wherever there is competition, these are substitute goods. That is, you'll do either or. You'll do one or you'll do the other. You'll do one or you'll do the other. Correct. So here, tea and coffee, Pepsi and Coca-Cola have been given as an example. Substitute means enemies of one another. Substitute goods basically means goods which are enemies of one another. That is, if person is having one, he or she will try not to have the other. In general, it will happen. Now you will tell me that, sir, I didn't bought tea and coffee. That is okay. But what I am trying to say is that if person consumes more of coffee, it indirectly means that they are consuming less of tea. Similarly, if a person is consuming more of tea, they are consuming less of coffee. That is all. That is all I am trying to say. Okay. Now moving on. Sir, what about demand? How is it affected? Please pay attention. So guys, what happens is, let's say if price of a commodity rises, if price of commodity rises, then the quantity demanded for complementary goods will fall. Similarly, if price falls of one good, quantity of another complementary good will rise. Sir, we did not understand. Please explain. See, if price becomes more expensive, you see, if price of car is rising, guys, pay attention. If price of car is rising, what will happen? The quantity consumption of car will eventually fall. But this is something we studied in point number 1, on price of the commodity. But guys, if the consumption of car is falling, if the purchase of car by the people is falling, don't you think that the quantity of petrol consumed is also going down? Quantity consumption of petrol is also falling down? Yes sir, we indeed think the same. Exactly my point. That is, if price of a car is rising, quantity of petrol is falling. So that is the relation between complementary goods, which is called inverse relation. So the keyword that you need to remember, friends, is inverse relationship. So in complementary goods, there is what relationship? Inverse or negative relation. Because as price of one complementary increases, the quantity for other will fall. Similarly, I'll give you another example. You see, if price of car would have fallen, then you are correct. Sir, quantity of petrol would have gotten what? Come on guys, answer my question. If price of car would have fallen, quantity of petrol would have, come on everybody in the chat, write your answer. What happens? If quantity of car falls, what happens with the quantity demanded for petrol? And remember, when we are studying one factor, other factors are assumed to be constant, okay? So yes, you are correct. When price of car falls, people start buying more of cars, and therefore quantity demanded of petrol will rise. Now some of you may ask, but sir, what if price of petrol is rising? I told you na, that here we are studying only one factor. That is, what will be the impact of quantity of petrol because of price of car. So when we are studying कि कार के प्राइस की वजह से पेट्रोल पर क्या इंपैक्ट होगा, तब we will not be concerned about पेट्रोल का प्राइस क्या है. We will assume it to be constant. I am telling you, जब भी आप एक फैक्टर को पढ़ेंगे, आप अदर फैक्टर्स को कांस्टेंट मानेंगे. Whenever you are studying a single factor, you will assume other factors to be constant. So when we are studying the price of car, the impact on quantity of petrol we are studying, then we will not also want to think what about price of petrol. We will not care about the same. When we are studying the impact of price on car on quantity of petrol, at that moment of studying this relationship, we will not be concerned about price of petrol. We are only concerned with price of car and quantity of petrol relationship. So as we can see, when price of car falls, quantity of petrol rises, and vice versa. Full stop. Yes, correct. Very good, very good, very good. So in complementary goods, there is inverse or indirect relationship. Inverse or indirect relationship, because if price of one is rising in complementary goods, the quantity for other is falling. If price of one is rising in complementary goods, the quantity of other is falling. Similarly, if price of first is falling, quantity of other is rising. There it is. Moving on. Let's talk about substitute goods now. So, sir, what happens with this? Guys, now you all tell me, if price of tea rises, come on everybody, if price of tea rises, what will be the impact on quantity demanded for coffee? Each one of you will have to answer. I will not answer. You will answer. Come on everyone. Come on everyone. You are absolutely correct that if price of tea is rising, then quantity for tea is falling, obviously. So people are buying coffee now. They are shifting to coffee. So quantity for coffee will rise. So yes, my dear friends, you will try to understand one thing. That in price and quantity, in case of substitute goods, there is direct relationship. There is what kind of relationship? There is direct relationship, because you can see as price of one commodity, that is tea, is rising, quantity for another commodity, that is the substitute, is rising. Both are going in the same direction. Always remember, when two things go in the same direction, it is called direct relationship. When they go in the opposite directions, it is called inverse or negative relationship. Yes, very good, Sakshi. Very good, very good. Very good, Anurag. So, my dear friends, let's summarize whatever we have studied till now in this factors affecting demand. Okay, let's summarize whatever we have studied in this concept of factors affecting demand till now. Okay, yes, sir, please go ahead. Let's study it. Okay, yes, sir. So, see, my dear friends, what we have been able to study till now is, my dear friends, what we have been able to study till now is that we have studied three factors. Obviously, we will move further. We will discuss other factors also. But first, let's revise the first three. Okay. In the first one, we studied own price of the commodity. First factor that we studied was own price of the commodity. Own. I am writing own. In the second factor, we studied the relationship with related commodities, and the third point was disposable income. Okay, I'll explain, I'll revise all the three with you, so pay attention everyone. Okay, pay attention. Number two was related commodities, and number three is income of the consumer. Related commodities, and number three is income of the consumer. So let's attack, sir. Let's try to think what we are able to do here. Let's pay attention, guys. Come on, everybody. Let's pay attention. So in own price, we have understood what kind of relationship. My dear friends, you can copy it with me. No problem. You can copy it with me. In own price, what we have studied? In own price, we have studied that there is an inverse relationship. That is, if price rises, quantity will fall, and if price falls, quantity demanded will rise. Correct? Yes, sir. This is inverse relationship. In related commodities, my dear friends, we studied two types of goods. Okay. Now I am going as per institute maths only. Complementary and substitute. So friends, complementary goods are the ones that are used jointly or purchased jointly, right? Like car and petrol. So for commodities like this, again there is inverse or indirect relationship, because you see, if price of car rises, quantity of petrol will fall. Other factors remaining constant always. And when we talk about substitute goods, there is a direct relationship that we see here. How come, sir? Because if you see, when price of tea is rising, quantity demanded for coffee is falling. No, quantity demanded for tea is falling. So quantity demanded for coffee will rise. Because yes, price of tea rises, quantity of tea will fall. But we are not concerned with that. We are concerned with what will be the impact on coffee. The quantity demanded of coffee will rise, and therefore there is a direct relationship. Okay. Now guys, I'll give you an MCQ question. Be ready after I discuss this disposable income part last. My dear friends, disposable income means disposable income. I'll explain in two languages, Hindi and English both. Disposable income means the income which is left with a consumer to spend. That is the income minus taxes. If your income is 10 lakh rupees and 3 lakh taxes you have paid, so your disposable income is 7 lakhs. 7 lakhs you can spend on your own needs. Okay. Again in Hindi, disposable income का मतलब है आप कितना पैसा खर्च करना अफोर्ड कर सकते हो. ये वो पैसे हैं जो आप खर्च करना अफोर्ड कर सकते हो, उसे हम लोग डिस्पोजेबल इनकम कहते हैं. उस खर्चे को जिसको हम लोग कर सकते हैं, उस इनकम को जिसे हम लोग खर्च कर सकते हैं. अगर हमारा इनकम 10 लाख रुपया है, सरकार ने हमसे 3 लाख रुपया टैक्स ले लिया है, 7 लाख हमारे पास बचा है, 7 लाख रुपए हमारे पास बचे हैं, तो ये जो 7 लाख है ये हमारा डिस्पोजेबल इनकम है. क्लियर सबको डिस्पोजेबल इनकम का मतलब? नाउ माय डियर फ्रेंड्स, disposable income, after you have understood, now I will explain all the 3 points that I explained, okay, under disposable income. See friends, if it is a normal commodity like the clothes we wear, you are absolutely correct. As disposable income increases, quantity demanded will rise. Very good. Absolutely correct you are telling. Okay, but friends, if it is not a normal commodity, if it is not a normal commodity, rather it is a inferior commodity, here we have here there was direct relationship, here there will be again inverse relationship. Why? Because as your income will rise, you will consume less of the inferior commodities, you will shift to better commodities. And in case of inexpensive commodities, income has no effect. Just because my income has risen, I will not start purchasing more of salt and matchboxes. They are of limited use, and so the demand will be limited no matter the rise in income. So these are the first 3 points that we have studied. Okay, now moving on to the fourth point. Friends, please pay attention. Okay, please pay attention. Okay, point number 4. Guys, is it crystal clear till here? Come on everyone, is it crystal clear, friends? Okay, very good. We have studied 3 factors that determine demand, that affect demand. Okay, yes. As far as superior or luxury goods are concerned, Ishan, we will soon discuss it in under the exceptions. Okay, so for those who are worried about superior commodities, we will discuss them under exceptions. Okay, articles of snob appeal, okay, Veblen effect, everything we will study. Okay, all under exceptions to the law of demand. We are studying now one at a time. Okay, so pay attention, guys. Okay, so let's pay attention, everyone. Moving on. Fourth point is consumers' tastes and preferences, or tastes and preferences of the buyers, whatever you want to call it. Tastes and preferences of the consumers or the buyers, it doesn't matter, it is one and the same thing. Of consumers slash buyers, tastes and preferences of consumers slash buyers. This is what I'm explaining you, friends, so please pay attention. Okay, see, it is all written in our very good material of Institute of Chartered Accountants, right? Okay, yes Arya, your answers are visible, you are answering absolutely correct. Okay, let's focus, guys. Okay, let's pay attention. Tastes and preferences of the consumer. So my dear friends, in case of tastes and preferences, the answer is very simple. I'll tell you. Yes, I'll tell you, it's very simple. If consumers are liking the taste, that is, they have a favorable opinion of the product, the quantity demanded will rise. And if the consumers have unfavorable opinion about the product, they don't like the product, unko product pasand nahi aaya, so quantity demanded will fall. Quantity demanded will naturally fall. Yes, sir. So this was point number 4. See, first 3 points, it's very important from MCQ. So sir, are you telling we should not study 4/5? No, we should study everything. But first 3 points are more of technical kind. These points are much more simpler, isn't it, sir? Yes, Rohit. Sir, what happens to quantity demanded? Sehajpreet is asking, what happens to the quantity demanded in case of inferior goods when income decreases? Now Sehajpreet, what very good question. Sehajpreet is asking a very good question. So let us answer Sehajpreet. Sehajpreet is saying ki sir, let's say the consumer's income has fallen in the case of inferior goods. Okay, what will they do? So Sehajpreet, the demand will rise na. Why will demand rise, Sehajpreet? Because Sehajpreet, अगर आप पहले भी कुछ अच्छा कमोडिटी परचेज करते थे, कुछ नॉर्मल कमोडिटी करते थे, तो अब आप नॉर्मल कमोडिटी को परचेज करना और कम कर दोगे, उसकी जगह आप इंफीरियर और खरीदने लग जाओगे, बिकॉज आपका इनकम कम हो चुका है. अंडरस्टूड? ओके सर, ओके. मूविंग ऑन. Tastes and preferences वाले point को we have discussed. It basically tells us that if you have a favorable impact, then the quantity demanded will rise, and taste and preferences, if the consumers don't like, the quantity demanded will fall. As simple as that. Okay, now moving on to the next point. Please pay attention, everyone. Moving on to the next point, which is point number 5. Point number 5 is, friends, consumers expectations. Okay, consumers expectations. Okay, I'll tell you what I mean by consumers' expectations. Okay, see, let's say consumers are expecting, consumers लोगों का expectation है, ठीक है, कि price in the future, let's say we are talking about a particular thing, let's say, you know, in COVID, during the times of COVID, we have seen it a lot. Let's say we are talking about a product called masks and hand sanitizers. Okay, now when COVID was striking, consumer were expecting that the future prices, that in the future prices of commodity will rise, in the future prices of hand sanitizer or masks may rise. So what will happen to the demand of for them at the present? Quantity of masks and everything, that is, you know, anything in the present will rise, just because there is an expectation that in future prices are going to rise. So the present demand will rise. And similarly, my dear friends, if it is expected that in the future prices are going to fall, then friends, what will happen? If it is expected that in the future prices are going to fall, then my dear friends, please pay attention. If it is expected that in the future prices will fall, then in the present quantity demanded will fall. Why? Because you see, as a consumer, we will think कि when prices will fall, we will buy the product then. Why do we need to buy the product now? We will have this kind of approach, isn't it? Yes sir, you are absolutely correct. This is what is indicated here. This is exactly what is indicated here, that just because you are expecting future rise in prices, your mass or any quantity demanded at the present will rise. Similarly, if you are expecting the prices in the future to fall, your quantity at the present is going to fall. Absolutely correct, correctly understood, friends. This is the fifth point. Very good. Sir, what about some other factors? In the institute's material, guys, if you have a look, there is, even if you don't have the book, don't worry, you will get it. First, listen here. If you are talking about other factors, there are other factors mentioned in the material where they are talking about, number one, size of population. These are very simple points, friends. See, if the size of population rises, what will happen to the quantity demanded? Obviously, more population, more demand, less population, less demand. Self-explanatory. B, level of national income. Obviously, if national income of the country rises, then quantity demanded will rise, and vice versa. That is, opposite is also true. That is direct relationship. Very good. Next is age of the population. Now see, it all depends on the age of population. So see, if it's a young population or is it an old population? Let's say if it's a young population, then maybe the demand for, you know, cafe, you know, there are a lot of cafes nowadays, that will rise. But let's say if there are old people, more of old people, yes, old people also go to cafes, but there might be, you know, more demand for public parks and stuff. And similarly, other commodities which the old people like. Okay, what I'm trying to say is the age of the country also decides the quantity which will rise and the quantity which will fall. Okay, moving on. Similarly, if there is young population, the demand for fast food will rise. But if the population is old, the fast food demand will fall, because old people tend to consume lesser fast food, obviously. Okay. Yes. Moving on to point number D, credit facilities. You see, friends, if whether there are credit facilities available or not. Let's see, there are credit facilities available or not. Sir, what does credit facility means? Means basically loans. Is the interest too high if we take a loan, or is the interest low? Obviously, if there is higher rate of interest, then consumers will take less of loans, and therefore quantity demanded will be less. But if consumer find out that interests are available, loan is available at very low rate of interest, then the amount of loans taken will increase. If loans taken will increase, consumers will use the money taken from loan to buy commodities, so quantity demanded will rise. These are the factors affecting demand. This much is more than enough. Is it crystal clear, friends? If yes, then let's practice an MCQ and then move on to our next heading. What say, friends? Come on everyone, come on everybody. Yes, very good, sir. Yes, Arshdeep, we can call it. Yes, Priyanka. Okay, now moving on. Now moving on. Our friend Priyanshu was asking, sir, what does indirect relationship mean? Priyanshu, I explained in this credit facility, na, like if interests are getting more expensive, consumers demand will fall. So opposite behavior, one is rising, other is falling. That, my dear friend, is called indirect relationship. Okay. Okay, 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 okay. Moving on. Now my dear friends, I'll tell you what the law of demand states. Law of demand is something we have already done. Sir, you did not teach us. Yes, I have. It's just that I did not tell you back then that it is law of demand that I am teaching you. Sir, what does law of demand say? Law of demand tells us that when price of a commodity rises, quantity demanded will fall, and when price of a commodity falls, quantity demanded for the same is going to rise, other factors remaining constant. Finished. Oh, sir, this is to just like the factors affecting demand, point number one that you explained on price of the commodity. Exactly. You are absolutely correct. That first point is itself the law of demand, which says that on price rises, quantity demanded falls. On price falls, quantity demanded rises. Other factors remaining constant. My dear friends, in Latin, other factors remaining constant is also called ceteris paribus. Ceteris paribus. Sir, what are these other factors? My dear friends, we studied right now, na? Other factors means income of the consumer, price of related commodities, population of the country, consumer tastes and preferences, technology. Everything is constant. Everything is constant, sir. Okay. Also, in this point, some of you are asking, sir, other factors. Can you please explain government policies? Yes, I can explain government policies. In basically government policies, what happens is whether government is imposing more GST or less. Let's say government is imposing more of taxes, product become expensive, so demand falls. If government gives us subsidies, we will be able to buy more. So it's very simple, huh? Okay, okay. Moving on. So my dear friends, one MCQ question for you all, and then we will move on to our next topic for the day. Okay, next very important topic for the day we will move on to, because the next topic in institute's material is individual and market demand, which we have already studied at the very beginning of today's class, if you remember. Okay, so the question is, please pay attention. My question to you all is, if price of if price of if price of blackboard teachers write now on blackboard. So if price of blackboards increase, what will happen to the quantity demanded for markers? Markers is what we used to write in blackboard, hai na? How will we write in blackboard if we don't have a marker? Okay, so what will happen to the quantity of markers? A, rise. B, fall. C, can't say. D, all of the above. What do you think is the answer, guys? Come on everybody, need answer from each and every friend. Come on everyone, need answer from each and every friend. Yes, very good, very good. Almost every friend has written the correct answer. So yes friends, you are correct. Let's say if the price of blackboard rises, see, if the price of blackboard rises, you know, maybe that your school will think of shifting to a different technology. So in general, the quantity of blackboard will happen, what will fall. And if quantity of blackboard is itself falling, then what will happen to the quantity of markers? Why will anybody buy markers if they don't have a blackboard, right? So it will fall. So decrease is the correct answer that most of you friends must have stated. Come on everybody, I believe most of you have answered this, and that is absolutely correct. Guys, do you understand this answer? Yes or no? So answer is decrease. Is it clear, every friend? Very good. Decrease or fall, both is the correct word. Though I'll change it immediately. Okay. Yumanshi, no, that is not important. Yumanshi, that is not important. Okay. Moving on. Correct. Moving on. See, pay attention, everyone. If you all friends have a look at your book now, the next topic that is written is, the demand schedule and this demand curve and all those things. But I completed that at the very beginning of the class. If you remember, everyone, I told you everything is from the syllabus we are doing. Just some different flow we are trying. Okay. So see, I'll explain this. I'll revise that again. So no one of you is affected. See, what is demand schedule? The question is, sir, what is a demand schedule? My dear friend, whenever in economics you hear the word schedule, schedule simply means a table, full stop. Schedule means what? A table. So let's say, for example, here I have drawn a table where I have indicated, pay attention everyone, where I have indicated, let's say, price and quantity demanded. Let's say price is 10 rupees, quantity demanded is 100. Let's say price increased to 15, quantity fell to 80. So my dear friend, this table that I have drawn, but that is called demand schedule. So what is demand schedule? Basically a table showing relationship between price and quantity demanded. Full stop. This is the demand schedule. Okay. Okay. One of our friends is asking, sir, so for this schedule, if we make a graph, it is called what? It is called a curve. It is called demand curve. So if for the given table you draw a graph, it is called the demand curve. It is called a demand curve. It is as simple as that. So let's say, for example, my dear friends, I'll draw it for you, because in economics, until and unless we draw graphs ourselves, we are not going to understand the things. Okay. So pay attention, friends. You all see here, it is price P1, it is price P2. So at price P1, quantity was Q1, and at price P2, quantity is Q2. So from here you have shifted here. Bus. That's it. This is exactly what I'm talking about, friends. This is exactly called a demand curve. Understood? This is exactly called a demand curve. Got it, sir? We have understood it completely. So friends, moving on now. Let's pay attention to the next topic, sir. Let's pay attention to the next topic, sir. Okay? Alright. And one of you are asking, what is the meaning of ceteris paribus? Ceteris paribus means, friends, other factors remaining constant. Other factors remaining constant. Other factors remaining constant is what ceteris paribus means. Means when you are studying relationship between, let's say, price and quantity demanded. So we are assuming that income is not changing and any other factor that we have studied is not changing when we are studying relationship between one factor and the demand for a commodity. Okay. So that is ceteris paribus. Now, my dear friends, I'll come to a very important topic that is what I'll repeat. Actually, I have already stated the same, which is individual and market demand. I have already stated at the beginning of class. See, here we are talking about one consumer, quantity demanded by consumer A, correct? But if we add another consumer, let's say consumer B to the picture, let's bring consumer B to the picture as well. You see, here we bring consumer B to the picture as well. Consumer B. So consumer B's demand is, let's say, 60 and 30. Now, if you add the demand of consumer A and consumer B, this is called a market demand. I explained at the very beginning. I am just repeating for you all. 60 plus 100, 160. 30 plus 80, 110. Acha, sir, is that so? Yes, that is so. We got it, sir. Now, my dear friends, we are studying a very important topic. Please pay attention, everyone. It is called rationale of the law of demand. It is called rationale of the law of demand. What are we studying now? Rationale of the law of demand. Okay. So please focus, everyone. Okay. The next topic in our institute's material is rationale of law of demand. Sir, what is the meaning of rationale? Rationale means logic behind the law of demand. Or it can also be asked, why is the demand curve downward sloping? We have understood, na? demand curve is downward sloping. So the question could be stated like this, that why is the demand curve downward sloping? You know, it is downward sloping indeed. You see from here to here, the movement you can notice. Okay, so yes, it indeed is downward sloping, right? Okay, so let's pay attention, friends. Why is it downward sloping? Okay, we'll understand this very well. Okay, so please understand it very well. Okay, see. Okay, so see, rationale behind the law of demand. Here we are studying why is the demand curve downward sloping. Why is the demand curve downward sloping? Okay, so let's pay attention, everyone. Okay, point number one is price effect. Point number one is price effect. So dear friends, just like the institute, I will divide price effect into two parts. Okay, price effect into two parts. Okay, yes, I am dividing it into two parts. Number one is income effect. Number two is substitution effect. Please pay attention, everyone, because these points are very technical. So you have got to understand it very deep. Because if you don't listen carefully, you will not understand it at all. Yes. So we are here studying rationale of law of demand, or why is the demand curve downward sloping. Okay. Please remember one thing, friends. In all the points that I will explain, indirectly there will be one conclusion. Indirectly there will always be one conclusion, that price rises, quantity demanded falls. So this I am telling you even before explaining anything, that all the points that I will explain, price effect, utility maximizing behavior, whatever, there in arrival of new consumer, different uses, one thing will be for sure, you will find out that price falls, quantity demanded rises. So this is the ultimate conclusion of all the points. What is the ultimate conclusion of all the points? Come on, everyone. What is the ultimate conclusion of all the points? That price falls, quantity demanded rises. So, sir, what are we studying here? We are studying the method to arrive at this conclusion. Different ways to arrive at that conclusion. Different ways to think about this conclusion. Okay? Are we ready, guys? Come on. Yes, sir, we are. Okay, so let's go. Number one is income effect. Number one is income effect. Please pay attention, everyone. The points are very technical in nature. Okay. Number one is income effect. So friends, have a look. Income effect is what we are explaining. Okay. Pay attention, please. My dear friends, a consumer has two types of income. Number one, nominal income, and then there is something called real income. In exam you may be asked, income effect is concerned with which one of them? Please remember, friends, income effect is concerned with real income. Obviously you will ask me that, sir, what is nominal income, what is real income? I'll give you an example. Okay, so pay attention, everyone. I'll give you an example of a person. Okay, see, let's say here there is Mr. C. This is Mr. C. Now Mr. C's, please pay attention, everyone. Okay, here there is Mr. C. Mr. C's income originally used to be income, let's say in 2010, used to be rupees 50,000 per month. Okay, rupees 50,000 per month. And let's for example assume that his entire income he spends on buying apples, let's say, and let's say price per apple in 2010 was rupees 10. So 50,000 by 10, 50,000 by 10 is how much, sir? It's 5,000 units, is 10 rupees. So 5,000 units apple Mr. C could purchase. Mr. C was in a position to buy 5,000 units of apple. Mr. C was in a position to buy 5,000 units of apples. Yes, sir, you are correct. But guys, try and focus here. Here I told you two things. Number one, what money in hand he is getting. I told you all he is getting 50,000 rupees in hand. Friends, this is called nominal income. Friends, this is called nominal income. Nominal income is the money that you are getting in your hands, the cash in hand. But real income means the purchasing power, of commodities. So if you guys compare, if you friends compare, what do you notice? Sir, you will notice that his purchasing power is 5,000 apples. With his given income of 50,000, he can afford to buy 5,000 apples. Now, in this year 2010 itself, let's say income in 2010 of there is another person, let's say Mr. E, okay? Income of Mr. E in this particular year is 60,000 rupees. Okay? Or let's keep it to be 50,000 only. 50,000 only. But let's say Mr. C lives on Earth, just for example, okay? And let's say Mr. E lives on Mars, just for example, okay? He lives on Mars. Now what happens is, in Mars the price per apple is, pay attention everyone, in Mars the price per apple is not 10 rupees, it is 5 rupees. It is 5 rupees. Okay? So guys, how many apples that Mr. E can buy? Sir, Mr. E, as per your example, can buy 10,000 apples, because you see 50,000 by 5 is 10,000. So yes, my dear friends, you see, both of these people have the same nominal income. Mr. E has 50,000 as nominal income and Mr. C also has 50,000 as nominal income. But guys, can you tell me whose purchasing power is more? Is the purchasing power same? Yes, nominal income is same because both are getting the same amount in hand, 50,000, 50,000. But can you tell me whose purchasing power is greater? Come on everybody, can you tell me whose purchasing power is greater? Come on friends. Whose purchasing power is greater? Come on everyone. Real income is nothing but purchasing power. Whose purchasing power is greater? Mr. C or Mr. E? Very good Anushka, good answer. Very good Divyanshu. Varun, Ashwini, correct answer. It is for the people in Mars, that is Mr. E. Exactly my point. Exactly my point. Now you see what has happened. When price fell in Mars, quantity, real income of the people in Mars started increasing, though the people in Earth and Mars have the same nominal income, but because price fell, the real income of the people in Mars is greater than the real income of people on Earth, and because the real income is greater, and just because the real income is greater, so the quantity demanded is also greater, because you can see they are demanding 10,000, they are demanding only 5,000. So guys, at the very beginning, what did I tell you? At the end of every point, one thing will happen. You will ultimately find price falls, quantity demanded rises. I told you here before, even before explaining, and this will happen with every single point. So this is called income effect. Substitution I am yet to explain. I have not explained, but is income effect clear? So what does income effect say, sir? Simply speaking, income effect tells, to summarize the income effect, you don't need to remember a lot. To summarize the income effect, you need to remember two to three things. Please pay attention everyone. Please pay attention everyone. Yes, income effect deals with not nominal income. Income effect deals with, correct, real income. And what does real income mean? Real income means purchasing power. Real income means purchasing power. So when a product becomes expensive, consumers' purchasing power or the real income falls, and because the real income falls, that is the purchasing power falls, so the quantity demanded falls. That is it. That is it. Even if you people are copying with me now, if you only copy this graph, this box that I have made right now, it is more than enough for your exam. It is more than enough for your exam. Trust me on the same. Come on everyone. Correct Divyanshu. So yes, here it is, income effect. Now guys, if it's crystal clear, I think I should move to substitution effect. Now, what is substitution effect? What is substitution effect? Friends, pay attention. I'll tell you what substitution effect is. Friends, pay attention. I'll tell you what substitution effect is. So my dear friends, basically substitution effect is telling is, what substitution effect is telling is, pay attention everyone. It tells us, please pay attention everyone. That if price rises, please pay attention everyone. What does substitution effect tells us? If price of one commodity, let's say tea, rises, if price of tea rises, then tea has become more expensive compared to other commodities, so quantity of tea will fall and quantity of coffee will increase. But sir, you explained this under the factors affecting demand. Exactly, I explained you under the factors affecting demand, but I wanted to repeat for you. There it is. That is substitution effect. That when the price of tea has risen, people have shifted to coffee, as a result of which quantity of tea has fallen. Full stop. This is substitution effect. And so if somebody asks you what is price effect, please remember, price effect is the sum total of income effect and substitution effect. Income effect and substitution effect. Income effect and substitution effect. Let's give you an MCQ question. Let's see who is able to answer this question. Income effect is concerned with number one, nominal income. Come on everyone. Income effect is concerned with nominal income. Number two, real income. Number three, none. What say guys? Come on everybody. I'll be needing your answers. Come on friends. Okay. Very good. So yes, all of you are giving answer number two, that is real income. Absolutely bang on correct. You are listening very well guys. Income effect is related to real income. Okay guys, one more question before I move on to our next point. First point, we are studying rationale behind the law of demand. We have studied the first point, which is price effect. Guys, I have one more question to ask you before I move on to the next point. Real income effect can also be called purchasing power. True or false? Real income can be called as true purchasing power. Is it true or false? Come on guys, what say? Very good everyone. Correct answer, real income. Everybody has answered. Amazing job. Okay, so let's move on to point number two then, which is utility maximizing behavior of consumer. Point number two is the utility maximizing behavior of the consumer. Okay, yes, it is true. Real income is really purchasing power. Very good everybody. Very good Lisa, very good Rohit, very good Sakshi, very good Snehashish, very good Rishika, very good Prachi, Sanjay, good answer. All right sir. Then let's move on to our next point then everybody. Come on. So point number two is utility maximizing behavior. We are studying the rationale behind the law of demand. So my dear friends, the next point we are studying is utility maximizing behavior. Utility maximizing behavior. I'll tell you something friends. This has another name and I want you all to know that name. Please listen to that name. It is called the law of diminishing marginal utility. It is called the law of diminishing marginal utility. Please remember, utility maximizing behavior is also called law of diminishing marginal utility. My dear friends, it is confirmed. Please listen very carefully. It is not a doubt. There is no doubt that in your upcoming CA foundation and in the past ones as well, law of diminishing marginal utility has been a very, very important topic. In fact, in our chapter 2, that is after demand is over, we will be discussing consumer equilibrium. I'll tell you something. In consumer equilibrium also we will have to study law of diminishing marginal utility. Here also we are having to study that. So please pay attention. Only 1 and 2 points are the ones that you need to pay a lot of attention to, because beyond that it is very basic points. Point 3, 4 and 5. Okay, so understand the point number 2 very well. Point 1 you people have understood. Superb, very good. So see, pay attention everyone. We are studying law of diminishing marginal utility. Sir, what is law of diminishing marginal utility, sir? Yes, Lakshmi, your answers are visible. Okay. See, we are studying law of diminishing marginal utility. Sir, first, what is utility, sir? First, our question is, what is utility? My dear friends, utility means want satisfying power of a commodity. Want satisfying power of a commodity. Sir, what is utility? Want satisfying power of a commodity. So if let's say a commodity is able to satisfy your want, it has utility. Let's say this pen that I am using to write. If I give it to you, you are noting down in copy. Using this digital pen, you will not be able to write down in the copy, in your hard copies that you have. So dear friends, they have no utility. They have no utility for you. But for me, they are very useful because I am able to write on my device using this. That's what I'm trying to say, friends. That something can have utility for someone, someone might not have. For example, let's say I like pizza a lot. You know, cheese burst pizza is one of my favorites. You know, I hope many of you must like cheese burst pizza also. So let's say cheese burst pizza is my favorite. But if I take this cheese burst pizza to someone who is, let's say, a bodybuilder, somebody who is very fitness conscious, do you think that pizza will have utility for them? It doesn't. So utility is a subjective concept. It may vary from person to person. It basically implies want satisfying power of a commodity. Okay. Okay, correct. Now, pay attention everyone. Pay attention everyone. Sir, what is marginal utility? I'll explain you something. My dear friends, Alfred Marshall told us that utility can be measured. That is how much satisfied you are getting with the commodity, it can be measured. Now you all must be thinking, sir, how can we measure utility? It is illogical. Why is it illogical, sir? Because how can Alfred Marshall tell us that utility can be, measured, because it is a subjective concept? Yes. Alfred Marshall tells us that the value of utility is the willingness to pay. The value of utility. Acha, who gave this law of diminishing marginal utility? Alfred Marshall. Please remember. Who gave the law of demand? Alfred Marshall. Please remember. Alfred Marshall. Alfred Marshall. So now pay attention everyone. Let's say guys, now value of, pay attention everyone. Value of utility as per Alfred Marshall is willingness to pay. Whatever you are ready to pay is the value of utility. Is the value of utility. Willingness to pay. Now sir, what is law of diminishing marginal utility? I'll explain you with a table. Please understand it very carefully. It's very simple concept. Okay, please listen to me very carefully, hai na? Okay sir. See, the question is, pay attention friends. Value of utility is the willingness to pay. Now let's say we are talking about mangoes here. Okay, we are talking about mangoes here. Okay, so quantity 1, 2, 3, 4, 5. All right, quantity is 1, 2, 3, 4 and 5. Now friends, please pay attention. If you purchase one mango, please pay attention friends. If you purchase one mango, obviously the first mango, you are very hungry, so you will be ready to pay more for it. So let's say 20 rupees you are ready to pay. So that is the value of total utility for the mango. But see, you after eating one mango, you are still hungry. After eating one mango, you are still hungry. It can happen. So now you will buy two mangoes, means 1 and 1, 2, total 2. But see, the second mango, you will want to pay, but you will want to pay less than what you paid for the first. So let's say total 2 mangoes taken together, you are ready to pay 38 in totality. Okay. For 3 mangoes in total, you are ready to pay 46 in totality. For 4 mangoes, you are ready to pay 50. For 5 mangoes, you are ready to pay 50, and for 6, you are ready to pay 48. Sir, why is it so? Because as and when your stomach is full, your willingness to pay for additional mangoes will fall. Your willingness to pay for additional mangoes will fall. That is called marginal utility. The change in total utility due to one additional commodity. See, pay attention here. Here the marginal utility was 20. Now the change in total utility is by 18. Here the change is by 8. Here the change is by 4. Here there is no change. Here there is a negative change. My dear friends, this is called diminishing marginal utility. Because you see, it is constantly falling. It is constantly falling. Marginal utility is constantly falling. That's why Alfred Marshall calls it as law of diminishing marginal utility. What does it indicate, sir? The willingness to pay for the extra commodity that we are purchasing. See, as and when we consume more and more of a commodity, our willingness to pay for the additional commodities will fall. Why? Because we are getting bored with it, or our stomach is full, our hunger is gone. So why will I be ready to pay more when I have no more hunger? Yes, sir. Logical, sir. Logical, sir. It is absolutely logical, sir. Your point is absolutely logical. That's what I'm trying to say. This is law of diminishing marginal utility. So now the consumer, you think from consumer's point of view, guys. The consumer will now buy additional unit only when he or she is given an option to buy that commodity at a lower price. When he or she is ready to buy that commodity at a lower price. Otherwise, he or she will not be ready to buy that commodity. Why? Because every time I am buying the commodity, my willingness to purchase more of it is falling. Because when first mango I bought for 20 rupees, I was very hungry. For second mango, I paid only 18. For third mango, I paid only 8 rupees. For fourth mango, I paid 4 rupees. For fifth mango, I paid nothing. As a matter of fact, now I have come to a point, I am so tired of mangoes that I am telling people that if they want to give me mango, instead of me giving them money, they will have to pay me money. Sir, how is this possible? You may be thinking. It is just the law, logically speaking. Okay? Okay, sir. So, Sir Alfred Marshall, sir, so remember everyone, Alfred Marshall is the one who talked in details about law of diminishing marginal utility and law of demand. Okay? What does the law of diminishing marginal utility say? Friends, law of diminishing marginal utility tells us that as we consume more and more units of a commodity, as we consume more and more units of a commodity, our willingness to purchase any additional unit will fall. Our willingness to purchase any additional or any more of the commodity will fall. Why? Because we already have got a lot of those commodities. So marginal utility is declining. So willingness to pay is declining. So you see one interesting fact, guys. Quantity in the future will rise only when price falls, because the consumer will be ready to buy more of the commodity only at a lesser price. And guys, what did I tell you? That every point that we study under this head, which had law of rational behind the law of demand, the end point will be the same, that price falls, quantity demanded. In price effect also, you see I had done the same. Price falls, quantity rises, and price rises, quantity falls. Same cheese happened here. Consumer will buy any additional unit only when they get it at a lesser price. Why? Because their willingness to purchase more of that commodity has fallen, because their hunger has been taken care of. Understood, sir? Yes, sir. Okay. And yes, you might get numerical questions also, so don't worry about the same. We will practice it. Let's focus on understanding. Okay, let's focus on understanding part. So this was the second point, guys. Now the other 2 points are very easy. Sir, what are the other 2 points? Can you please explain? Yes, point number 3, arrival of new consumers. Now guys, that is an interesting concept indeed. Arrival of new consumers. Sir, please explain us this point, arrival of new consumers. Please explain us this point, sir. See. Listen. See. When new consumers are entering the market, for example, I'll give you an example. Let's say, initially, the cost of perfume was rupees 5,000, okay, per bottle. Now, if the perfume cost was rupees 5,000 per bottle, people were not very happy with purchasing perfume. They were not very excited about it. there were consumers, obviously there were people, let's say 100 units of perfume was being consumed back then. But guys, try and understand, if the price of perfume becomes 500 rupees now guys, you try and feel, initially there was a large crowd who was not applying perfume, who was not buying perfume, but now many new consumers, now many people will become buyer of this product. Why will many new people become the buyer of this product? Because they are very happy. Why they are very happy? Because it has come within their purchase range. This is what the third point is saying, that when price falls, new consumers enter the market who were initially not purchasing the product. As a result, quantity will rise. And if the price rises, let's say if the perfume becomes even more expensive, this 5 lakh perfume, 5,000 becomes 50,000. So many of the consumers who were purchasing it at 5,000 might not purchase. So consumers may leave the market. So quantity may fall. See, at the end, the same conclusion is coming again and again. Only the way I'm explaining is different. Okay. Okay. So see, now pay attention everyone. I have done 3 points. Now I will summarize the 3 points in Hindi. I will summarize the 3 points for you all in Hindi. Please pay attention everyone. Come on everyone. Come on, pay attention. The 3 points in Hindi I will summarize. We are doing, हम लोग पढ़ रहे हैं रैशनल बिहाइंड द लॉ ऑफ डिमांड. मतलब लॉ ऑफ डिमांड डाउनवर्ड स्लोपिंग है, पर ऐसा क्यों? ऑब्वियसली आप लोग बोलेंगे क्योंकि इनवर्स रिलेशनशिप है प्राइस एंड क्वांटिटी के बीच में. अब हम लोग 3 पॉइंट्स अभी तक पढ़े हैं जो इस इनवर्स रिलेशन को एक्सप्लेन करता है. अभी तक हम लोग 3 पॉइंट्स पढ़े हैं जो इस इनवर्स रिलेशनशिप को एक्सप्लेन करता है. सर वो तीनों पॉइंट्स को एक्सप्लेन कीजिए एक एक करके. पॉइंट नंबर 1 आप लोग सुनिए. देखिए पॉइंट नंबर 1 में क्या हुआ दोस्तों. नंबर 1 वाज प्राइस इफेक्ट. प्राइस इफेक्ट को हम लोगों ने 2 भागों में बांटा, इनकम इफेक्ट और सब्स्टिट्यूशन इफेक्ट. प्राइस इफेक्ट इज इक्वल्स टू इनकम इफेक्ट प्लस सब्स्टिट्यूशन इफेक्ट. ठीक है. अब इनकम इफेक्ट का क्या अर्थ होता है? इनकम इफेक्ट का मतलब होता है रियल इनकम से. इनकम इफेक्ट का मतलब होता है कि जब एक कंज्यूमर का रियल इनकम बढ़ रहा है तो क्वांटिटी डिमांडेड बढ़ रहा है, रियल इनकम घट रहा है तो क्वांटिटी डिमांडेड घट रहा है. बट सर कंज्यूमर का रियल इनकम कब बढ़ता है? जब कमोडिटी का प्राइस कम होता है, तब कंज्यूमर का परचेजिंग पावर जो है वो बढ़ जाता है. रियल इनकम और कुछ नहीं, कंज्यूमर का परचेजिंग पावर है. रियल इनकम और कुछ नहीं, कंज्यूमर का परचेजिंग पावर है. ओके, मूविंग ऑन टू द नेक्स्ट पॉइंट, सब्स्टिट्यूशन इफेक्ट. सब्स्टिट्यूशन इफेक्ट हमें यह कहता है कि अगर आज चाय महंगा हो गया, टी हैज बिकम एक्सपेंसिव, तो कॉफी का क्या हुआ? अगर चाय महंगा हो गया तो लोग कॉफी पर शिफ्ट कर रहे हैं, कॉफी का डिमांड बढ़ रहा है. बस दैट इज सब्स्टिट्यूशन इफेक्ट. मूविंग ऑन, सेकेंड पॉइंट था लॉ ऑफ डिमिनिशिंग मार्जिनल यूटिलिटी. लॉ ऑफ डिमिनिशिंग मार्जिनल यूटिलिटी हमें कहता है, इसमें अल्फ्रेड मार्शल हमें कहते हैं कि जैसे जैसे कंज्यूमर्स के पास एक कमोडिटी ज्यादा होते जाएगा ना, तो वो और कमोडिटीज को खरीदने के लिए कम पैसे देना चाहेगा, क्योंकि उसके पास ऑलरेडी बहुत सारा कमोडिटीज आ गया है उस नेचर का. क्या तो उसका पेट भर गया होगा. अब आपको अगर भूख लगी है, आपको मैंगोस मिलेगा, तो पहला आम के लिए आप बेसिक पैसे देने को तैयार होगे, दूसरे आम के लिए पहले से कम, तीसरे के लिए दूसरे से कम. क्यों? क्योंकि आपके पास कमोडिटीज इकट्ठा होते जा रही हैं, आपका पेट भरते चला जा रहा है. तो अब आप एक्स्ट्रा आम तभी खरीदोगे जब आपको वो कम प्राइस पे मिलेगा. दैट इज लॉ ऑफ डिमिनिशिंग मार्जिनल यूटिलिटी. थर्ड पॉइंट, अराइवल ऑफ न्यू कंज्यूमर्स. जब एक प्रोडक्ट महंगा होता है तो काफी कंज्यूमर्स ऐसे होते हैं या काफी क्राउड ऐसा होता है जो उस प्रोडक्ट को टच भी नहीं करता. जैसे मैंने परफ्यूम का एग्जांपल लिया, पर वही परफ्यूम जब सस्ता हो जाता है तो और भी लोग मार्केट में एंटर कर जाते हैं उस परफ्यूम को खरीदने के लिए. एग्जैक्टली दैट इज माय पॉइंट. माय डियर फ्रेंड्स, ये 3 पॉइंट्स क्लियर है, तो एक आखिरी पॉइंट बताएं क्या? कम ऑन एवरीबॉडी. उसके बाद सिर्फ एमसीक्यू करेंगे. कम ऑन एवरीबॉडी, फटाफट एवरीवन, आर वी रेडी? कम ऑन एवरीवन, आर वी रेडी? उसके बाद अपने 2-3 एमसीक्यू सॉल्व करेंगे. कम ऑन एवरीबॉडी. ऑल राइट, सो पे अटेंशन फ्रेंड्स, पे अटेंशन फ्रेंड्स. पॉइंट 4 is different uses of a commodity. Different uses of a commodity. Different uses of a commodity. Sir, please explain this point, different uses of a commodity. Okay, different uses of a commodity. So sir, what is different uses of a commodity? Pay attention everyone. See, different uses of a commodity. Let's say guys, milk. Pay attention everyone, milk. My dear friends, what happens is, if milk price is low, suppose you want cream, your mother will tell you or your parents will tell you, no, we will make cream for you at home. So you will use milk to make cream at home only. Why? Because the price of milk is very low. Let's say cheese you need. Your parents tell you, okay, we will make cheese for you at home because the price is so low. You want ice cream. Your parents are telling that we will use this milk to make ice cream at home only because the price of milk is so low. But guys, if price becomes expensive, price becomes more. How can price become expensive? I'm sorry, milk becomes expensive. If milk becomes expensive, that is the price rises, what will happen? My dear friends, when the price of milk rises, now your parents will tell you that no. Milk will only be used at home for making tea, and if there are children at home, then for drinking, no other purpose. For other purposes, like if you need chocolate, cheese and anything, go and buy from the market. This is what this point is saying, that when a product is cheap, people are going to use it for both the purposes. One is the more important uses and one is the less important uses. Like for example here, drinking milk was a more important use, so people were doing that already. But when its price got low, people started using it for the less important needs also. But when milk becomes expensive, then what do? People become very cautious. Oh no, the price has risen. So what will they do? They will say, no baba. We will do what? We will use milk only for the most important of the uses. For rest of the uses, we will buy the product directly. We will not use it for the lesser important reasons. That is the fourth point. So when price falls, quantity rises. Why? Because now this product whose price has fallen is not only being used for the more important ones, but also for the less important uses. Sir, in Hindi once more. अगर एक कमोडिटी महंगा होता है तो लोग केवल उसको खरीदते हैं उसके मोस्ट इंपॉर्टेंट यूज के लिए, परंतु जब वही कमोडिटी सस्ता हो जाता है तो लोग उसको लेसर इंपॉर्टेंट यूजेस के लिए भी यूज करने लग जाते हैं. एग्जैक्टली यही पॉइंट मैं आपको एक्सप्लेन कर रहा हूं. कि जब एक कमोडिटी महंगा होता है तो लोग उसको हर चीज के लिए परचेज करते हैं. सस्ता होता है तब हर चीज के लिए यूज करते हैं, बट जब वही कमोडिटी महंगी हो जाती है तो लोग उसको सिर्फ मोस्ट इंपॉर्टेंट रीजंस के लिए यूज करते हैं. तो जब प्राइस गिरता है तो क्वांटिटी बहुत जोर से बढ़ता है, एंड जब प्राइस बढ़ता है तो क्वांटिटी बहुत जोर से गिरता है. एंड एज आई टोल्ड, हर पॉइंट का कंक्लूजन यही रहने वाला था. इज इट क्रिस्टल क्लियर एवरीवन? कैन वी प्रैक्टिस 2 or 3 more MCQs? Come on everyone. All right, fantastic. Yes, Ritik, very good. Yes, very good, sir. Very good. Now, my dear friends, I will take some MCQs and let's see whether you are able to answer it or not. Come on, everyone. Let's see. My question is, price effect is the sum total of dash and dash. Option 1, income effect and substitution effect. Option number 2, income effect and Veblen effect. Point number 3, demonstration effect and Veblen effect. Point number 4, all the above. So I'll explain the options again. Income effect and substitution effect, income effect and Veblen effect, then demonstration effect and Veblen effect, all the above. What do you think is your answer to this MCQ question, everybody? Oh my god, even before completing the question people are answering. Wow, really amazing to see this, yaar. Very good. Very good. Sir, the answer is income effect and substitution effect. Absolutely bang on correct you people are. Absolutely correct. Moving on. Next question, my dear friends. Let's hear it from you. What you are able to do. Let's see. Let's see. Come on, everyone. As per law of diminishing marginal utility, consumer will buy more of a product. Consumer will buy more of a product when you have your options here. As per law of DMU, consumer will buy more of a product when its price rises. B, its price falls. Come on, everyone, let's see. Very good, Maheen. Very good, Durgesh. Good answer. Sahajpreet, Tanmay. Very good. Very good, Loveleen. Okay. Very good answer, Priyanka. Absolutely correct. And the good news is, not almost, in fact, 100% of the people have given the correct answer. Amazing answer. Come on, everyone. Very good. So, the answer is when the price falls, consumer will buy more of the commodity. When the price falls, consumer will buy more of the commodity. So, you people are bang on correct. And my dear friends, from next day, I mean in our next class, we will study the following topics: exceptions to the law of demand, elasticity of demand, movement and shift of demand. I hope everything was crystal clear today. That's it for the day, my dear friends. Goodbye, everyone. Take care. Bye bye, everyone. Thank you very much.